The Reserve Bank of India in an announcement today has said that they have reviewed the guidelines for priority sector lending after meeting and talking to all stakeholders involved. Now first let's take a look at what is the meaning of priority sector lending. Well, this is a very important role that is given to banks to lend specifically a part of their loan book to sectors that need hand-holding and financial support. And as per RBI guidelines, the sectors which come under priority sector lending include agriculture, MSMEs, export credit, education, renewable energy, housing and social infrastructure. Now talking about a part of the loan book that the banks are supposed to lend, for commercial banks, for domestic commercial banks and foreign banks, 40% of the loan book should be lent to these priority sectors. And for small finance banks and regional banks, 75% of the loan book has to be lent. Taking a look at what are the guidelines that have been announced by the RBI specifically today, they have included fresh categories, and these include bank finance for startups till up to 50 crore rupees, loans to farmers for installation of solar power plants, for solarisation of grid-connected agriculture pumps, and they have also included loans for setting up compressed biogas plants. Now there are a few salient features that the RBI has given which will be a part of these guidelines and the changes that it will bring about. The first is that these guidelines will address regional disparities in the flow of priority sector credit. Higher weightage is assigned to incremental priority sector credit in identified districts where the flow of this money is comparatively less as compared to other districts in the country. Apart from that, the targets prescribed for small and marginal farmers and weaker sections is being increased in a phased manner. So as per the guidelines and the details in the guidelines, for small and marginal farmers, the targets of lending for banks will be 8 to 10% of the loan book. So right now it is at 8%, it will be increased to 10% by FY24, and for weaker sections of the society, it will be increased from the 10% currently to 12% by FY24. Now, higher credit limit has been specified for farmer producer organizations and companies that are undertaking farming with assured marketing of their produce at a predetermined price. Additionally, loan limits for renewable energy have been increased for a boost to the sector, and credit limit for health infrastructure has been doubled, including for those under Ayushman Bharat. Now, what the RBI is saying is that all these revision and guidelines is to align with emerging national priorities, especially considering the current situation. We are in the middle of a pandemic, and also bringing sharper focus on inclusive development through these revised guidelines. They have also said that these revised guidelines will enable better credit penetration to credit deficient areas, especially as the districts that the RBI has mentioned. And the revised guidelines has focused mainly on small and marginal farmers, weaker sections, health infrastructure and renewable energy. So this is a comprehensive focus shift that RBI is trying to bring in. They're trying to include more sections of the society and give further help to sections of the society that need hand-holding and finance support.